All right, y'all, we are live on this beautiful Wednesday. Blessings to everybody in the name of Jesus, Yeshua the Messiah, even if you are not religious. Guys, today is the day. Today is the day. FOMC, baby, we've been waiting for it for so dang long. The first FOMC with Trump in the office, guys. It's a perfect storm. We got ourselves the deep book, the deep fake, whatever you want to call it. Deep fake book, deep book, deep look. We got ourselves a new president in office. We got ourselves a stock market losing $1 trillion in one day. Crypto's at all-time highs. Things are going to get extremely volatile, so make sure to like the dang stream. Make sure to subscribe to the dang channel, because if we can get 1,000 likes within the first half hour, we will be giving away 1,000 USDT, baby. We will be giving away 1,000 USDT. We got low audio. Hang on, give me 1 second. Check. Is that any better? Let me know. Hang on 1 second. Bear with me. All right, how's this? How's that? How's this? How's that? Let me know. Audio is weak. Mic is busted. All right. Well, we're going to have to go with plan B, guys. Plan B is this. Give me 1 second here, y'all. 1 second. Bear with me. All right. Let's see. No, it seems like we got some audio. 1 second. Bear with me.
Let's check this out. How's this sound, guys? Let me know how this sounds. Let me know how this sounds, guys. It's good. All right. Let's check this out. How's this sound, much guys? Better. Much better. All right, awesome. All right, guys, today is the crazy day that we've all been waiting for. FOMC. Jerome Powell coming out the gate. Is he going to cut rates? Is he going to keep rates the same? Honestly, right now, everyone's expecting that he's going to be keeping the rates the same. In fact, let's take a look over here. We're going to take a quick look at forexfactory.com. And as you can see, well, pretty much they're expecting no rate cut. They're expecting a pause on interest rates. And so, long story short, here's what I think. I think they're probably not going to, they're not going to increase rates. They're probably going to keep rates the same. There's a chance that they might actually decrease the rates. But I think what we really need to wait and see is how Jerome Powell starts talking when he comes out the dang closet. Sipping on that scissor, baby, at the beach. When he comes out the dang closet and tells us how he's feeling about the economy in general. Got to give a major shout out to everybody in the chat right now. Let's see who we got in the house today, baby. First of all, major shout out to Splashfire Films. We going to raise or we going to decrease? Shout out to J-Boy Bullish. He says money flow coming in on the hourly is going to pump, baby. Man, I hope it does pump. Shout out to Investment Time. Shout out to Handyman Home Repair. Shout out to Preparing for War. Same rate, but volatility nonetheless. Absolutely, and this is what we need to be prepared for. First of all, there's going to be 2 injections. All right, 2 injections. Just two injections, and then you'll be immune for life, baby. 2 injections of volume. The first injection is going to happen as soon as he makes the announcement. Well, as soon as they release the announcement, and we're going to see some volatility pop in. And then during the press conference, we're going to see some more volatility start to pop in. And let's check out the 1 hourly money flow, as J-Boy Bullish says, coming to the upside. Yeah, so here's what we need to be aware of, guys. Here is what we need to be aware of. On the Bitcoin chart, we're going to be looking at Bitcoin. We're going to be looking at everything during this entire process here. There's a few major areas to be aware of. Area number 1 is going to be the Fibonacci golden pocket pull to the 786. This is going to be resistance. If we get a big move to the upside, this is major resistance. Also to the downside, we've got the Fibonacci Golden Pocket 786 zone of support. We got our two sisters on both sides, the bears and the bulls. And of course, two sisters, we're talking about 6 Juanita, the 618 Fibonacci level, the girl who broke our heart in high school. We thought she liked us. Turns out we were in the friend zone. We got absolutely wrecked when we tried to ask her out on a date. And then of course, our older sister, the 786 Fibonacci level, she is also not going to date us because she's just not into dudes like that. And so we're waiting to see what's going to happen here. We're in a few long trades, setups given in advance in the Casper Crew VIP Discord. Shout out to the Casper Crew, JasonCasperTrading.com. Also, guys, right now, BLOFIN is offering 10% cash back if you sign up using the link in the description. BLOFIN, great exchange. I love trading on BLOFIN. I'm actually in a little bit of a short trade that looks like it's going to get stopped out at the entry when we pump. Also, WEEX, guys. WEEX, amazing deal on fees, does not require KYC. Also, I am trading on MEXC. MEXC, check it out. Best deal on fees if you can KYC. MEXC and ByBit are definitely the way to go. Make sure to smash up the likes, guys. Make sure to smash up the likes because, as we've been saying, if we can get 1,000 likes within the first half hour, we will be giving away 1,000 USDT. We got almost 2,000 people in the house. Or almost 2,000 people in the house. Let's see if we can't get those likes up. Major shout out to Andrew F. He says free money on post chain. Okay, I don't know. You're probably shilling something. Shout out to the Dusty Hunt. We got 6 minutes and 30 seconds, baby, until the announcement comes out. Careful with info on your screen. You can see the screen in the glasses. Well, okay, that's okay. I ain't got nothing on the screen that you guys can't see. You guys can see my whole dang screen, baby, all right? You guys can see my whole dang screen. But look at this. These glasses actually trip out the green screen, and you can see, I think that's the green screen that you're actually seeing through, my man. So yeah, that's the green screen tripping out over here. All right, man, I'm feeling like Tom Crown right now with these sunglasses on, baby, all right? I'm feeling like Tom Crown right now with these sunglasses on, you know what I'm saying? JD Vance, shout out to FitGenius618. Shout out to Abu. All right, guys, man, I am so excited to watch this price action come in here. All right, we're getting a little bit of a pump to the upside right now. We're getting a little bit of a pump to the upside. All right, got to take another little sip on the scissorp over here real quick. All right, give me 1 second here. What is going on with this, actually? Hang on. Sorry, guys. It's a little bit crazy to... It's a little bit weird going on right now. Whoa, man. This is crazy, man. This is crazy, all right? This is absolutely insane. Okay, let's over to the order flow. Sorry, guys. I literally got no sound. I got no headphones. I got, whoa! Oh my goodness, guys. Massive increase of open interest right now on the order flow chart as we are waiting 4 minutes for the Federal Reserve to make their announcement. FOMC, baby. What's it gonna be? FOMC. What's it gonna be? This is such a good drink. We got longs coming in out the wazoo right now, all right? We got longs coming in out the wazoo. 10 million volume candle. Longs and shorts coming in. People are putting their money where their dang mouth is, man. People are putting their money where their mouth is because people are expecting a move here and people are trying to front run. Can I even go back into here? What the heck? People are trying to front run the news. We got a 10 million volume candle, only 800,000 more longs and shorts here. All right, we got 3 minutes until the news comes out. We're looking for a pump, baby. We're looking to pump the Bitcoin straight up to a new all-time high. Let's see what happens here. Let's see what happens here, baby. Man, oh man. What do you guys think is going to happen? We put a poll in the chat, and it looks like most of you guys say we're going to pause. 33% say cut rates. 13% say increase rates. All right, 13% say increase rates. Hang on, I gotta adjust my chair here, guys. We got some weird stuff going on. It's hard to stream like this, trust me. Shout out to Crypto Coons. MEXC seems to freeze accounts. Nah, I don't really think so. I've never had an issue with that. Tom Crown wants his sunglasses back. Yeah, I feel like Tom Crown right now. Honestly, I feel like straight up Tom Crown right now. All right, here we go, baby. We got 2 minutes and 3 seconds until the news comes out. What are they going to do to the interest rates? Of course, if they decrease interest rates, guys, that is going to pump us up to a new all-time high. If they keep them the same, that's to be expected. But of course, we need to wait for Jerome Powell to actually come out with the press conference, and hopefully we'll be able to watch together. Major shout out to Charles. He says, Tima is a great buy. All right, we got the team of shills up in here, man. We got the team of shills up in here. Shout out to Tom Crown. 2 minutes left. 1 minute and 35 seconds left. We might be. I hope we can do the pump song, guys, because honestly, these headphones that I got here, for some reason the mic wasn't working so good today. So I don't know. I might have to try and fix this. Okay, let me see what I can do with this. Actually, give me 1 second here.
1 minute.
All right, 1 minute, 1 minute. We got 1 minute, baby. Until the news. All right, I've got audio again here. 55 seconds, baby. I'm so excited. You guys excited? Here we go. Here we go. Open and long, 100x. Well, I'm in a long right now, 10x. All right, maybe I'll increase the leverage to 100. I don't think so, though. All right, here we go, baby. Here we go. $21 seconds. Let's check out the order flow. We got a 12 million volume candle. Actually has negative delta right now. People are really opening up trades like crazy. Look at this. Shorts and longs both opening up right now. We're going to go back to our 5-minute time frame here. Shorts and longs both opening up. Oh man, we're dumping like crazy. What just happened? Nothing happened, guys. Oh man, Bitcoin taking a big of a purple candle. Oh man, all right, let's go to the 1 minute time frame here. Let's check out what happened. Whoa, look at that purple candle, baby. Volatility coming in. Bitcoin taking a massive dump. All right, let's check out the S&P 500. Also taking a dump. Let's check out the DXY. Dollar getting a massive blue candle. Oh my goodness, look at the dollar on the 1 minute time frame. Look at the S&P 500 on the 1 minute time frame, baby. Let's go to Bitcoin. All right, getting a little bit of a move to the downside. To be expected, though, because, you know, okay, so our short trade is still open here from yesterday. Setup given in advance in the Casper Crew VIP Discord, baby. We're getting some volatility right now, so we want to pay attention to our key zones. We got our key zones on the chart. Remember, our two sisters here, we got the 618 and the 786, right? The 618 Fibonacci and the 786 Fibonacci. All right, 618, hot girl, rejected us in the friend zone. 786, her older sister, who's actually just a tranny. All right, so both of them are not going to date us, but you could see here that these are our two major zones, so the volatility is going to kick in. We're going to be looking to see if we get to zone number 1 or zone number 2, and those are going to be the places where we look for the trades right now, and you can see we're getting moved to the downside. Let's go back to the order flow and check it out on the 5 minute time frame. What do we got going on? Oh my goodness, guys, look at this. Absolutely crazy. Shorts coming in now, 1.6 million shorts. We had positive increase of open interest with negative delta. We've got people actually trying to short this right now. People are shorting the news. Let's see if those shorts get wrecked or not. We have a lot of longs, actually 2.2 million longs opening up in this first candle. And we have longs under the water right now. What is going to happen? We'll check out market Cipher B. We're going to start on the 1 hour. Honestly, guys, the 1 hour does look like we could get a push to the upside, but we have to be prepared for bearish divs if we take these highs again into the Fibonacci golden pocket. The 4 hour time frame on market Cipher B for Bitcoin right now. Very, very ambiguous, kind of like my look when I graduated from college with my degree in trans non-carbon binary emission gender studies. We're still in our long trade up $6,000, $4,300 realized. Or we're still in our short trades here, $3,000 realized, $5,000 unrealized, setup given in advance in the Casper Crew for both of these short trades and these long trades, baby. So let's see what's going to happen as we are watching right now. Long starting to close out. Oh my goodness, we're getting a purple candle to the downside. We got to get back to the 5 minute time frame. Look at this purple candle, guys. Massive purple candle right here. We're going to take a look at the dollar. Whoa, dollar starting to get a little bit of a pullback here after the news comes out. S&P 500 starting to get a little bit of a bounce as the dollar starting to get a little bit of a pullback here. Bitcoin is actually taking the hardest hit as Bitcoin is getting a move back down. Oh my goodness, would you look at this? Absolutely phenomenal. We're going to take back at the order flow chart. We're coming into VWAP. This is make it or break it. This yellow line right here, guys, this is the VWAP line. We got to hold this line. Are we going to bounce from the VWAP? Come on, Bitcoin, we're gonna bounce from the VWAP. What's it gonna be, Bitcoin? What's it gonna be? Come on, what's the market maker gonna do? What's the market maker gonna do? We need Tino from Traders Reality in here to tell us what the market maker's gonna do. We got the vector candles coming in. Long trades getting liquidated right now, absolutely wrecked. Long trades are closing out. Short trades are opening up. Long trades closing out. Short trades are opening up. Bitcoin's taking a massive dump. Short trades up right now, almost 6,000 US dollars. What a juicy drink I'm drinking, guys. All right, so we're losing the VWAP. Let's see. If we reclaim the VWAP, that's going to be bullish, all right? If we reclaim the VWAP, that is going to be bullish, baby. All right? Now, I can't wait for... Oh, man, we're dumping down again. We got more shorts opening up, longs closing. Shorts opening, longs closing. Bitcoin getting a dump to the downside. Oh, my goodness. This is crazy. You know, I don't even know right now if my audio is in sync with my voice. I'm gonna have to do a quick check. All right, let me do a quick check real quick. All right, we are taking a little bit of a dump, but no worries, guys. No worries. All right, no worries. No worries. Yeah. Gotta do a sound check, baby. Yeah. Gotta do a sound check. About to do a sound check. Let me do it. Let me get the sound check. All right. Just want to do a quick sound check right there to see if my audio's on sync with myself. Let's see how it works. Are we going to get a short squeeze? Let's see. We're coming. If we reclaim the VWAP, we can get a short squeeze. Here we go, baby. Let's see what happens. Let's see what happens. All right. We are taking a little bit of a dump, but no worries, guys. No worries, all right? No worries. No worries. Yeah, gotta do a sound check, baby. Yeah, gotta do a sound check. Sounds like the audio's good, man. Sounds like we can do a sound check. All right, that's what's up, man. That is what's up. All right, so we gotta reclaim this VWAP. If we reclaim the VWAP, we're about to absolutely pump. It looks like we're gonna absolutely pump, baby. Is Jay really in Cuba? Of course, Jay's really in Cuba, man. Of course, I'm in Cuba. All right. Let's see what we got going on here. Let's check it out. What do we got? Yeah, here's what we got. All right, here we go, baby. Let's see if we can't pump it up a little bit. We got to reclaim that VWAP, man. We got to reclaim that VWAP. Can we do it, you think? Let's see. We're reclaiming it, baby. We're reclaiming VWAP. We're about to pump it up. Yeah. About to pump. Yeah. Like Donald Trump, yeah, about to pump, yeah, here we go, baby, Bitcoin, FOMC, about to pump it up like straight up Donald Trump. We got the candles turning purple, then the candles turning blue. The Bitcoin price about to show you what she gonna do, and we come back to the order flow school. Got the longs coming in, and the purples be fools. Talking about the bears, know what I mean? Chilling in their underwears and they're looking pretty mean. Baby, here we go, and I'm chilling at the beach. Got the Tom Crown sunglasses, eating a peach. I'm sipping on my drink like a nice little leech as I suck it out the cup when we're looking for the bleach. Gotta bleach my hair in my underwear over here on the YouTube. Don't even care. And oh snap, we're losing VWAP and we're coming back down. And the Bitcoin price about to drop right into the ground because here we go, back on WEEX, link in the description. Got the short on fleek, giving in advance. The Casper Crew VIP Discord. Got the fire ants as I'm dancing in my pants. JD Vance, you know the vice president coming around. Hopefully you're not spent. We got the ByBit trades also open. Longs pumping up. Next thing you're joking. Casper, $5,000 in the profit. Can you spot it? To the golden pocket, then we top it. Coming back down 786 to the old tricks. Next thing you know, she's looking like a chick flick with the movie. She's the guy in disguise. Got the 786. She's not very wise. Will we pump? Will we dump? Baby, it depends. Adult diapers, a means to an end. Maximum absorbency. XL26, the Bitcoin price. XL back to her old tricks. Next thing you know, we're outside picking up the sticks. Then we turn around looking like a Ricks with the Ritz. It got the Ritz crackers coming in. Here we go, baby, out to eat the breakfast din. It got the short trade open really cute in the clear with the two, with the chillin' in the pool, yeah. Back to nice XO. The Bitcoin price is looking like an XO underneath the VWAP. Then we start to drop to the spot. Can you come it back down to the top? Can you lock it in? Got the profits coming in on fleek. Make sure to like the video. Let's take a peek at the net longs, net shorts. About to get whore. Got the longs open now. The rec back to shorts. Got the shorts opening up below the VWAP. Bitcoin about to dump. Then we hit the top. Look at the move coming down. The Bitcoin price about to drop right into the ground. And then in about 30 minutes, Jerome Powell coming out the place so sweaty I need a towel. Hopefully Jerome Powell got a nice drink, put everything in the trays like a kitchen sink. Yeah, now here we go, baby. The Bitcoin price, will it pump? Maybe. Yeah, take a sip of the drink, put it back in the sink. Got some nice ice, looking cold, looking rice. Go outside, looking like you wanna take a lick of nice. You know what I'm talking about, baby. Don't you hit the spout. 1, 2, 3, 4, 5, 6, 7, 8. Then we hit the cloud. Yeah, we got the tray still open. The Bitcoin price, baby. Jason, are you joking? Why we gotta get a purple candle? We only wanna see the bulls get a handle to the upside. Pump it up, baby, up only. Golden bull run, this ain't no baloney. Salami, the turkey, the roast beef and cheese. Will we pump Bitcoin, please, baby, please? You know we gotta pump it, you know we can't dump it. Come on, JD Vance and good old Donald Trump it. Got the deep book from the China, Nvidia down $1 trillion. I don't whine ya, got the Tom Brown glasses on my face. The Bitcoin price, man, such a disgrace. What music am I playing? Ask Paul of Neef. I don't even know, man. Coral Reef in the background. Here we go, we're chilling at the beach. Jason Casper, you know that he wants to eat a peach. In of this crap, so important, yet he raps, dude. Yeah, man, that's how we do it. Don't mean to be rude. I don't care, bro. I'm chilling at the beach, making thousands of dollars in the trays with the keys. Drinking from the cup every single day. Don't you know we hit it with the cup, and that's how we play, baby. Yeah. Take a look at my eyes. The Bitcoin price is in for a surprise. We got the Apple headphones, but they don't work. As the Bitcoin price about to dump right into the dirt, baby. Yeah, did we get 1,000 likes? Can we do the giveaway? So dang close, let me hear you say 104 more likes, then we give away $1,000, and we do it today, baby. Yeah. All right. Cool. So look at this, guys. Here's what's going on. Shout out to J-Boy Bullish, man. Gotta give a major shout out to J-Boy Bullish and his son, man. God bless you. You're the man, J-Boy Bullish. Seriously, bro. Okay, so we are losing the VWAP. Here's what happened, guys. We had a major spike of open interest here. Longs and shorts both opening up at the same time, okay? Mostly shorts, but not too many more shorts than longs. And now we're wrecking those longs. Those longs have now been absolutely wrecked. All the longs that opened are now wrecked. And we've got shorts opening up. Okay, what we really need to do now as we're getting this volatility is we need to wait for Jerome Powell to start speaking, because that's really when we're going to get his view of the market. Is he hawkish or dovish? And hopefully he comes out feeling kind of dovish, because if he comes out hawkish, in my opinion, we're going to continue to dump down. All right, we're going to continue to dump down. What was the rate decision? Yes, it was pretty much, guys, the rates are unchanged. All right, the rates are unchanged. All right, shout out to Lauren, shout out to Crypto Coons, shout out to Estella, Trump going live. Really? Is this true? No way. No way. Trump's going live right now? No way. No way. Hang on, hang on. Is this real or is this, come on, don't FUD me on my live stream, baby. Trump live now. We got to Google this. Trump live now? Nah. I don't see it. I don't see it, baby. All right, we gotta give a major shout out first of all to J-Boy Bullish. All right, love you, man. Shout out to Ryan. If I get liquidated while he raps, I'm gonna lose myself in the music. The moment you own it, you better never let it go. Oh, you only get one shot. Do not miss your chance to blow. Cuba, yeah, man, Cuba. That's where. Look, I am Cuban. All right, I'm Cuban, so you gotta come to Cuba. Cuba, that's the way to go. All right, so we're getting that move to the downside, baby. Make sure to smash up the likes. I think we're going to get to do a $1,000 giveaway today, man. Yes, we're giving away $1,000, baby. Not right now. So don't spam the chat right now. Don't do it right now, but we are going to be giving away 1,000 USDT today, baby. All right? Man, oh, man. Let me tell you guys something, okay? Let me tell you guys something. I'm telling you, all right? Electrolyte powder mixed with Zevia cream soda with some ice. You gotta sip it slow. Don't you know? You gotta sip it slow. All right. Shout out to the Casper crew. Set up given in advance for this short trade. Shout out to the Casper crew. Set up given in advance for the long trade from the exact bottom. All right. JasonCasperTrading.com, the best trading community in the world, guys. All right. We gave the long from literally the exact bottom. We gave the short from literally the exact top. All right. Also, guys, MEXC, link in the description. Best deal on fees. WEEX. If you can't KYC, WEEX is the best alternative to MEXC. Also, BLOFIN right now is offering 10% cash back on pretty much everything you deposit. All right. So if you know how to trade, these are good deals. If you don't know how to trade, these are horrible deals because you'll sign up and then you'll lose everything. All right. You'll lose absolutely everything. Trump is live. Okay. Trump is live. We got to find this out. How do we find this out? Hang on. I will find this out. We're going to listen to Trump. We're going to listen to Trump. Okay. Let's see. Trump is live right now. Let's check this out, baby. I'm going to get hit with copyright twice now. Someone's playing the piano, okay? Someone's playing the piano for Trump. It sounds like Mr. Rogers' theme song. What is going on, guys? What in the world? This is the craziest stream I've ever streamed in my life. Uh-oh, here we go. Hang on, I'm going to put it on the screen. Here it comes.
Ladies and gentlemen, the President of the United States.
This is insane. This is insane. I just can't even, man. Oh man, he's gonna talk about crypto, isn't he? He's gonna say Bitcoin's the best.
Thank you very much. Please, thank you very much. Before we begin, I want to provide a brief report on the unprecedented success our country has been witnessing in recent weeks. Since even before the election, we've been making extraordinary progress. The American people gave us a clear mandate to save our country, and we won all 7 swing states by large margins, historic. Very importantly, we won the popular vote by millions and millions of votes. Also, all 50 states, as you know, shifted toward the Republican Party, and that's never happened before. All 50, every single one of them. In our first week in office, we set records, taking over 350 executive actions. That's not been done before. And it has reportedly been the single most effective opening week of any presidency in history. And we want to keep it that way. We want to keep it going. We want to keep it going. We've broken from decades of failed Washington policies and restored common sense and sanity to our government. We've unleashed American energy, and we've already achieved record low illegal immigration. As you see, there's nobody trying to get in. And that's what we've been waiting for a long time, and gotten woke ideologies out of our government and out of our military. The water has now begun flowing in California as we continue to increase the flow in coming days. Nobody's seen anything like that, and I've also taken strong action to regain control of the Washington bureaucracy. Just for clarification purposes, because it was incorrectly reported yesterday, we have informed the federal workforce, which they've looked to do for many years, that if they're working for the federal government, they must show up to the office on time and on schedule. We don't want them. We don't want them to work from home because, as everyone knows, most of the time. They're not working. They're not very productive. And it's unfair to the millions of people in the United States who are in fact working hard from job sites and not from their home. As federal employees, they must meet a high standard. They're representing our government. They're representing our country. If they don't agree by February 6th to show up back to work in their office, they will be terminated, and we will therefore be downscaling our government, which is something that the last 10 presidents have tried very hard to do but failed. Most of the people we're talking about have not been going to their federal offices in many, many years, from even before COVID. But they have nevertheless been paid. Some have worked, some haven't worked, and most of the studies say that some have just gone through the motions. We may ask these people to prove that they didn't have another job during their so-called employment with the United States of America, because if they did, that would be unlawful. As you understand, a lot of people are getting paychecks, but they're actually working other jobs, so they'll have to prove that to us that they weren't. In any event, we're requiring them to show up to work or be terminated. We think a very substantial number of people will not show up to work, and therefore our government will get smaller and more efficient, and that's what we've been looking to do for many, many decades, frankly. Thank you. In addition, there was a short-term pause or funding freeze on certain discretionary spending.
We'll watch Powell. We'll watch Powell at 2:30.
Government grants, only for us to quickly look at the scams, dishonesty, waste, and abuse that's taken place in our government for too long. As was explicitly stated, this in no way affected Social Security, Medicare, Medicaid, or other entitlements that Americans depend on. I've made abundantly clear from the very first day that I ran from office, that was a long time ago now, that's 2015. If you think about it, I announced in 2015 and we won in 2016. We did very well in 2020, but we did really well just recently. And I'm restating right now to correct any confusion that the media has purposely and somehow, for whatever reason, created. Social Security, Medicare, Medicaid have not been affected by any action we're taking in any way, shape, or form. We are merely looking at parts of the big bureaucracy where there has been tremendous waste and fraud and abuse. In that process, we identified and stopped $50 million being sent to Gaza to buy condoms for Hamas. 50 million. And you know what's happened to them?
Wait, what did he just say?
As a method of making bombs. How about that? We stopped an attempt to make an illicit payment for illegal alien resettlement. We canceled $181 million in DEI training contracts. This is just for the training of people in DEI, which has been terminated and completely terminated. And we paused $1.7 billion in unauthorized payments to foreign organizations, including stopping more than $40 million that was on its way out the door to the very corrupt World Health Organization, which has not done its job and not done it properly. We also blocked $45 million for diversity scholarships in Burma. 45, that's a lot of money for diversity scholarships in Burma. You can imagine where that money went. These were the types of payments, and many others. I could stand here all day and tell you things that we found, and we have to find them quickly because we want the money to flow to proper places. But these were the payments and types of payments affected by the temporary freeze, and the American people strongly support these efforts. I talked about it during the campaign, and they voted for us in record numbers. Every single day, we're now putting America first and fighting to get the most out of every single tax dollar for our great citizens. We've gathered this afternoon to take another historic action. However, in a few moments, the Laken Riley Act will become the very first bill that I proudly sign into law as the 47th President of the United States. Laken was a brilliant and beautiful 22-year-old nursing student from Georgia, the best in her class. She was always the best. They would say, Laken, how do you do this? And what do you do? They were always asking her questions. She was respected by everybody, even her teachers. They respected her so much. From the time she was in first grade, Laken knew she wanted to spend her time caring for others. That's what she did. To her friends and classmates, she was a light of warmth and kindness in every single room. To her parents and family, she was everything in the world. They've had a miserable period of time. Just after 9 a.m. last February 22nd, Laken went out for a jog on the campus of the University of Georgia, but she was just never returned. She never came back, did she, huh? Parents are here, sister, all of her relatives. While on her run, Laken was attacked, viciously assaulted, beaten, brutalized, and murdered by an illegal alien gang member who was set loose into our country by the last administration. We are deeply honored to be joined today by Laken's parents, Allison and John, and her sister, Lauren. Thank you very much. Thank you. So sad. We were together right after that happened, and it's a tremendous tribute to your daughter, what's taking place today. That's all I can say, but it's so sad we have to be doing it at all. Thank you very much for being here. To Laken's family, we will keep Laken's memory alive in our hearts forever, everyone's hearts. With today's action, her name will also live forever in the laws of our country, and this is a very important law. This is something that has brought Democrats and Republicans together. That's not easy to do. Laken did it. Laken did it. America will never, ever forget Laken Hope Riley. The vicious criminal who murdered Precious Laken was an illegal alien member of the barbaric Venezuelan prison gang known as Tren de Aragua. He trespassed across our southern border in 2022 and was apprehended by Border Patrol, but under the cruel policies of the last administration, instead of being deported, as he should have been, he was released into the United States, as were millions of other people, many of them very dangerous people. And you see what we're doing, we're getting the hell out of here. He was soon arrested again in New York City on charges of endangering a child, but because of New York City's deadly sanctuary policies, as we have in California and many other places, which we're ending, we're going to end them, he was released again to reoffend. The Biden administration then provided this illegal alien criminal with a free, taxpayer-funded flight from New York to Georgia, where he was arrested yet again, constantly, this time for stealing from a Walmart along with his gang member brother, who was a bad one. Only after being released a third time by the U.S. law enforcement did this cold-blooded criminal go out in that fateful morning hunting for women on whom to prey. That's what he did. He hunted. It was like a hunter. And we're going to show him who the hunter is. This horrific atrocity should never have been allowed to happen. And as president, I'm fighting every single day to ensure that such a tragedy never happens again. We don't want this to happen. And under the law, thank you. Under the law I'm signing today, the Department of Homeland Security will be required to detain all illegal aliens who have been arrested for theft, burglary, larceny, shoplifting, assaulting a police officer, murder, or any crime that results in death or serious injury. In addition, for the first time ever, this act gives state governments the ability to sue the federal government for immediate injunctive relief if any future administration ever again refuses to enforce the immigration laws of the United States, like happened for 4 long years. And that was happening for 4 long years, frightful years.
All right, we're going to have to switch over to Jerome Powell soon, guys, all right?
Criminals to pour into our country and then try and defend it. And they're still trying to defend it, but they can't. That's why I'm here instead of somebody else, actually. It's the biggest reason. I believe it's the single biggest reason. Inflation was horrible. Many things were horrible during that administration. When you look at what took place in Afghanistan, the way they got out, not that they got out, but the way, so many things were horrible. But to me, this was the worst of all. It's a landmark law that we're doing today. It's going to save countless innocent American lives. I want to thank every House Republican, every Senate Republican, as well as the 12 Senate Democrats and the 48 House Democrats who voted to pass this.
We're gonna have to get JP up in here, guys, because that's really what we want to see. We want to know about those rates. And here we go. I hope we get some good music in here while we wait. Jerome Powell, oh yeah, Jerome Powell, yeah, Jerome Powell. Oh, here we go, baby. Get ready. Come on, JP. Bro, what you waiting for, man? There we go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong, is strong overall, and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer-run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. For 2024 as a whole, GDP looks to have risen above 2%, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have slowed in the fourth quarter, but was strong for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid. Payroll job gains averaged 170,000 per month over the past 3 months. Following earlier increases, the unemployment rate has stabilized since the middle of last year, and at 4.1% in December remains low. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.6% over the 12 months ending in December, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. Over the course of our 3 previous meetings, we lowered our policy rate by a full percentage point from its peak. That recalibration of our policy stance was appropriate in light of the progress on inflation and the rebalancing in the labor market. With our policy stance significantly less restrictive than it had been and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. As we previously announced, our 5-year review of our monetary policy framework is taking place this year. At this meeting, the committee began its discussions by reviewing the context and outcomes of our previous review that concluded in 2020, as well as the experiences of other central banks in conducting reviews. Our review will again include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. I would note that the committee's 2% longer-run inflation goal will be retained and will not be a focus of the review. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-run inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve.
Mr. Chairman, Steve Leisman from CNBC. Mr. Chairman, at a event in Davos, or to Davos anyway, the president said he'll demand that interest rates drop immediately. So I guess I have a 3-part question. Has the president done this to you? Has he made that demand? Secondly, what is your response to that? And third, what effect, if anything, if any, does a president making these kind of remarks have on policy? Thank you.
3 questions. I'm seeing it really as one question, though. So I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so. The public should be confident that we will continue to do our work as we always have, focusing on using our tools to achieve our goals and really keeping our heads down and doing our work, and that's how we best serve the public.
Can you just comment on whether he's physically communicated this demand to you?
I've had no contact.
Thank you.
Thanks.
Nick.
Nick Timmeros, The Wall Street Journal. Chair Powell, you and several of your colleagues said around the time of the last meeting that your policy stance was meaningfully restrictive. Given economic and financial market developments since then, how has your confidence changed in an assessment that says interest rates are meaningfully restrictive?
I don't think that my assessment really has changed. I mean, a couple of things have happened. We've gotten more strong data, but we've also seen rates move up at the long end, which could represent a tightening in financial conditions. I think if we look back over the past year or so, we can see that policy is restrictive. If you look at the effect of high rates on interest-sensitive spending, for example, in housing, and if you look at the achievement of our goal variables, we're seeing the economy move toward 2% inflation and has moved largely to maximum employment. So we really look at movement toward the goal variables to make that assessment. Now, policy is meaningfully less restrictive than it was before we began to cut. It's 100 basis points less restrictive, and for that reason, we're going to be focusing on seeing real progress on inflation, or alternatively some weakness in the labor market before we consider making adjustments.
If I could follow up, does the economy here warrant meaningfully restrictive interest rates? And would you judge interest rates to still be meaningfully restrictive if you were to lower them by another quarter point?
So I think our policy stance is very well calibrated, as I mentioned, to balance the achievement of our two goals. We want policy to be restrictive enough to continue to foster further progress toward a 2% inflation goal. At the same time, we don't need to see further weakening in the labor market to achieve that goal, and that's kind of what we've been getting. The labor market has really been broadly stable. The unemployment rate has been broadly stable now for 6 months. Conditions seem to be broadly in balance, and I'd say you look at the last couple of inflation readings and you see we don't overreact to 2 good readings or 2 bad readings, but nonetheless the last couple of readings have suggested more positive readings. So I think policy is well positioned.
Colby from the New York Times.
Colby Smith with the New York Times. Chair Powell, how should we interpret the removal of the line from the statement that inflation has made progress towards the 2% goal? Is that no longer the case?
No. So let me look. If you just look at the first paragraph, we did a little bit of language cleanup there. We took out a reference to since earlier in the year as it related to the labor market, and we just chose to shorten that sentence. Again, I mean, if you look at the sort of intermeeting data, it was good, and there was another inflation reading, I guess, just before the December meeting. So we've got two good readings in a row that are consistent with 2% inflation. Again, we're not going to overinterpret 2 good or 2 bad readings, but this was not meant to send a signal. Other than this, you can take away from all of this that we remain committed to achieving our 2% inflation goal sustainably.
And just to follow up, we've seen inflation expectations across a number of measures rise sharply, which has in part been linked to tariff concerns. But there's also been this encouraging data that you mentioned in terms of CPI and rent indices. So how would you characterize concerns about upside risks to inflation across the committee, especially those tied to policies related to the Trump administration?
Well, I'd say you see expectations moving up a little bit at the short end, but not at the longer end, where it really matters. And those could be related to what you mentioned, some of the new policies. I think where the committee is very much in the mode of waiting to see what policies are enacted. We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy. We're only just beginning to see, actually are not really beginning to see much, and I think we need to let those policies be articulated before we can even begin to make a a plausible assessment of what their implications for the economy will be. So we're going to be watching carefully, and as we always do, this is no different than any other set of policy changes at the beginning of an administration. We'll patiently watch and understand, and kind of not be in a hurry to get to a place of understanding what our policy response should be until we see how it plays out.
Michael McKee.
Michael McKee from Bloomberg Television and Radio. You and your colleagues normally condition future policy moves with the phrase, if the economy develops as we anticipate. Is it fair to say that since there's a lot unknown about what this administration's fiscal policies are actually going to be, that you don't have a medium to long-term economic forecast that you can have confidence in? Or if that's not true, can you lay out what you think is going to happen in the economy, how you see it developing?
Well, at all times, forecasts are conditional at a minimum on just a set of expectations, and they're highly uncertain in both directions. We know that economic forecasting is really difficult beyond just a month or two out. So in the current situation, there's probably some elevated uncertainty because of significant policy shifts in those four areas that I mentioned: tariffs, immigration, fiscal policy, and regulatory policy. So there's probably some additional uncertainty, but that should be passing. We should go through that, and then we'll be back to the regular amount of uncertainty. So, what forecasters are doing, not just us, but everybody's doing, is they've got sort of just a set of assumptions about what might happen, but they're really kind of in the nature of a placeholder, and meaning, plausible could be, but honestly, you wouldn't stand behind it because you just don't know, and so you're just on hold, waiting to see what comes down. It's a very large economy, and policy is affected at the margin, but we're going to wait and see.
If I can follow up, the idea that you feel the economy, that policy is restrictive, suggests that the Fed in general wants to continue to lower interest rates. So when you look at the data that you are dependent on, are you looking for data that tell you that you can cut, or data that will tell you should hold?
We're looking. It's more the other. The way it works is we are looking at the data to guide us in what we should do, and that's what we do. And right now, we feel like we're in a very good place. Policy is well positioned. The economy's in quite a good place, actually, as well. And what we do expect is to see further progress on inflation, and as I mentioned, as we see that, or if we were to see weakening in the labor market, that could foster, we could then be in a position of making further adjustments. But right now, we don't see that, and we see things as in a really good place for policy and for the economy, and so we feel like we don't need to be in a hurry to make any adjustments.
Howard.
Howard Schneider with Reuters. Thank you very much. In 2021 at a central bank conference, you said, quote, throughout my career in both public and private sectors, I've seen that the best and most successful organizations are often the ones that have a strong and persistent commitment to diversity and inclusion. These organizations consistently attract the best talent by investing in and retaining a world-class workforce. First question is, do you still believe that? And if so, how do you intend to put that belief into practice while remaining consistent with the recent executive order prohibiting diversity and inclusion efforts?
So let me say yes in answer to your first question, but to the second question, I want to say this. We are, like others, we're reviewing the orders and the associated details as they're made available, and as has been our practice over many administrations, we are working to align our policies with the executive orders as appropriate and consistent with applicable law. And I want to add that I'm not going to have anything more specific for you today on this whole set of issues.
Well, if I could just follow up quickly on that, I'm wondering how you're getting that to be consistent with the Dodd-Frank law's stipulations about maintaining an Office of Minority and Women's Inclusion.
So I did mention consistent with applicable law, right?
Which is governing.
Elizabeth. Thanks so much. Elizabeth Schulze with ABC News.
Just to follow up on Steve's question, what reassurance can you give the American public that the Fed will continue to operate independent of politics under this administration?
You know, as I've said countless times over the years, this is who we are. This is what we do. We study the data. We analyze how it will affect the outlook and the balance of risks, and we use our tools to try to, given our best understanding, our best thinking, try to achieve our goals. That's what we do. That's always what we do. Don't look for us to do anything else. And that's, you know, lots of research shows that's the best way for a central bank to operate. That'll give us the best possible chance to achieve these goals for the benefit of the American people. That's always what we're going to do, and people should have confidence in that, as I said a few minutes ago.
You've said that the Fed is in wait-and-see mode based on the policies that come out of this administration. Has the Fed started to model what policies like mass deportations, changes in immigration policy specifically, would look like for the workforce and for inflation?
So one of the things our staff does is they look at a range of possible outcomes, and they tend to go from really good to really bad, and you know, it's one of the best things that they do. And in each teal book, you can look at the 5-year-old teal books and see there are alternative simulations. So that's what they do. There'll be a baseline, and then they'll show 6 or 7 alternative scenarios, including really good ones and not so good ones. And what those do is they spark, you know, the policymakers to sort of think and understand about the uncertainties that surround this. So yes, the staff does that, and we're all well aware that the range of possibilities is always broad, and not just now, but always. And it's hard to be open to just how broad the possibilities are for an economy. You know, no one saw the pandemic coming, and it changed everything. So things happen, and but yes, we do that. But it's different. It's one thing to do that, to make assessments about what might happen and begin to think about what you might do in that case. But you don't act until you see much more than we see now.
Katerina.
Katerina Saraiva, Bloomberg News. You know, last month you talked about a future rate cut as being pretty, significantly predicated on more progress in inflation. With the characterization of the labor market in the statement today, would you say that that's even more so the case now?
I'd say it's the same. You know, we want to see, further progress on inflation. And, the story's there. We're just going to have to see the data. At the end of the day, it comes down to 12-month inflation, because that takes out the seasonality issues that may exist. And, we're just going to need to see that. We think we see the pathway for that to happen. One example, a key example, is that you now do see owner's equivalent rent and housing services, the way it's calculated for PCE. You see that coming down pretty steadily now, and that's the place where most of the remaining gap is. In addition, a big part of the overrun, as you will know, was from non-market services, which don't tend to send much signal. So you can look through all that and think, okay, that then we seem to be set up for further progress. But being seen to set up for it is one thing, having it is another. So we're going to want to see further progress on inflation. But remember, we're not, we're under 2%, but our goal is 2%, and we do mean to get back sustainably to 2%.
And in terms of the labor market, I mean, how is that broadly, you said a broad set of indicators show that it's in pretty solid place. Was there broad agreement on that? There's been a few underlying indicators that are showing perhaps some weakness, a low hiring rate, workers reporting that it's increasingly difficult to find a job. Is that of concern to the committee?
So you're right. I mean, we look at, of course, a very broad range. So it starts with unemployment, with the unemployment rate, employment participation, wages, job quits, are people quitting, that kind of thing, the ratio of vacancies to unemployed. We look at all those things, and you put your finger, though, on it's a low hiring environment. So if you have a job, it's all good. But if you have to find a job, the job finding rate, the hiring rates have come down, and that's that's more typical of a, let's say that the unemployment, that the labor market is at a sustainable level. It's not overheated anymore. We don't think we need it to cool off anymore. We do watch it extremely carefully. It's one of our 2 goal variables. But yeah, I'd say we watch those things quite carefully. But nonetheless, overall, look at the aggregate data in the labor market. It does seem to, the labor market does seem to be pretty stable and broadly in balance when you've got an unemployment rate that has been pretty stable now for a full half a year.
Edward.
Thank you, Mr. Chairman. Edward Lawrence with Fox Business. On employment, you said there's a broad range of possibilities, but last September you said, quote, "We understand that there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise." Now that the flow of the border has slowed and we're seeing deportations, how do you expect the unemployment rate to react?
So what's happening is that the flows across the border have decreased very significantly, and there's every reason to expect that to continue. And so, but job creation has come down a bit too. So, if those 2 things come down together, that sort of can be a reason for the unemployment rate to stabilize. In other words, the break-even rate, as population growth slows, the break-even rate that you need in new jobs to make make jobs for workers declines as well. So that seems to be something about what's happening. You do see a very flat unemployment rate at a time when you've seen significant declines.
I want to ask you about Fed employment. I know that tax money is not used here, but Elon Musk alleges that the Fed is, quote, absurdly overstaffed. We've seen the executive branch push to reduce the federal workforce. I just want to get your reaction.
We run a very careful budget process. We're fully aware that we owe that to the public, and we believe we do that. I've got no further comment than that. Thanks.
Chris.
Chris Rugaber at Associated Press. President Trump has said he will lower inflation by reducing gas and energy costs. Do you see such costs as a particular driver of inflation, and would lowering them have a dramatic effect?
Chris, I'm not going to react or discuss anything that any elected politician might say, so I'll give you a mulligan.
Okay, thank you. Well, nearly 2 weeks ago, the Fed said it was withdrawing from the network for greening the financial system, even as we have significant wildfires in Los Angeles doing billions of dollars in damage. And of course, the NGFS, as you know, is a group to talk about how the financial system could address climate change. Many commentators did see the timing as political. Why did you leave that organization? Can you explain that decision?
Sure, I'd be glad to. So we considered this, really at length, and we did decide to withdraw from the NGFS. And really the reason is that the work that the NGFS does has broadened very significantly. Think about nature-related risks and biodiversity and things like that. In addition, the work of the NGFS is in significant part intended to, and this is a quote, mobilize mainstream finance to support the transition toward a sustainable economy. So we joined to get the benefit of understanding what other central banks were doing and seeing research and things like that. I think this is just way beyond any plausible mandate that you could attribute to the Fed. And so we have a quite narrow role, as I've said many times, and I think that the activities of the NGFS are not a good fit for the Fed, given our current mandate and authority. So, and I just think it was time to acknowledge that, this process dates back, thinking about it dates back a couple of years. I made the decision to bring this to the board, some months ago. The process just took time to get here, and this is when we got it and voted on it. So, and I'm aware of how it can look, but it was really not driven by politics. It was driven by kind of the disconnect between the work of the NGFS and our mandate. Other central banks have different mandates and belong to the NGFS. We have no criticism of them, but it just isn't. It's not right for the Fed.
Andrew.
Thanks. Andrew Ackerman with the Washington Post. I'm wondering if you could talk more about what further progress would look like for consumers.
Well, 2% inflation down to 2% sustainably is what we're trying to achieve. we're somewhat above that, as you know, and we want to see serial readings that suggest that we're making further progress on inflation. That's what we want to see, and consumers will pick that up, of course, in the things that they buy at the grocery store or at the store.
The other thing I wanted to ask was just how far away you think you are from neutral.
Yeah, you can't know with any precision, of course. As I like to say, that you know the neutral rate by its works. So I think at 4.3%, we're above pretty much everyone on the committee's estimates of the longer run neutral. I think our eyes are telling us that our policy is having the effects on the economy. That's really the question we ask. You can consult models, empirical models, theoretical models. You really have to just look out the window and see how your policy rate is affecting the economy. And I think we see that it's having meaningful effects in bringing inflation under control. It has helped bring the labor market into balance as well. So that's what we think. I would say we're meaningfully above it. I have no illusion that anyone knows precisely how much that is. But not knowing that and having cut 100 basis points means that it's appropriate that we not be in a hurry to make further adjustments.
Victoria.
Victoria Guido with Politico. So as a general matter, when it comes to executive orders and OMB memos, do those always apply to the Fed, sometimes, never, or do you just often voluntarily comply? What is the legality there?
So it's been our practice, as I mentioned, to work to align our policies to those that are mentioned in the executive orders, and I'm just going to leave it at that. As I mentioned, I'm not going to go any deeper than that or get into any deeper into this set of issues today.
Claire.
Claire Jones from the Financial Times. Two questions, if I may, on tariffs. Well, first of all, we've seen global trade wars before, notably in 2019, last time around, but...
Oh my goodness, wow, she's a Brit asking a question. I can't believe it.
Both. If we see tariffs of the same sort of magnitude that we got then, which I know is big if, what do you think might be different this time around? And secondly, Tiff Macklem said there was no doubt that the threat of tariffs was a big driver of the cut by the Bank of Canada today. What sort of information would the Fed need to see on tariffs before it was willing to take such a preemptive move? Thank you.
Sorry.
What sort of information would you need to see on tariffs? Would you need to see a strategy, actual implementation, actual movement of inflation expectations before you're actually willing to change the path of monetary policy on the basis of it?
Yeah, so first of all, things are a little different now. We've just come through a high inflation period, and you can argue that both ways. You can say that companies have figured out that they do like to raise prices, but we also hear a lot from companies these days that consumers have really had it with price increases, and so I don't know how that shakes out. Nonetheless, you're coming through a situation where we're not quite back to 2%, and that's just different. In addition, the trade, the kind of footprint of trade has changed a lot as trade is now spread around. It's not as concentrated in China as it was. There was a lot more manufacturing. It moved to Mexico and other places. So there are differences, and I just think the range of possibilities is very, very wide. We just don't know, and I don't want to start speculating, as tempting as it is, because we really don't know. And we didn't know, by the way, in 2018. Yeah, we didn't really know. And, again, the range of possibilities very, very wide. We don't know what's going to be tariffed. We don't know for how long or how much, what countries. We don't know about retaliation. We don't know how it's going to transmit through the economy to consumers. That really does remain to be seen. There are lots of places where that price increase from the tariff can show up between the manufacturer and the consumer. just so many variables. So we're just going to have to wait and see. And the best we can do is what we've done, which is study up on this and look at historical experience, read the literature, and think about the factors that might matter. And then we'll just have to see how it goes.
Courtney.
Thank you. Courtney Brown from Axios. Two unrelated questions. The first is whether or not there was any discussion about QT and the timeline for ending QT at this meeting. And then the second question is just, I wonder if the AI-prompted sell-off in the stock market this week signaled anything to you about the state of financial conditions?
So, let's talk about runoff. So the most recent data do suggest that reserves are still abundant. Reserves remain roughly as high as they were when runoff began, and the federal funds rate has been very steady within the target range. We track a bunch of metrics, and they do tend to point to reserves being abundant. We do intend to reduce the size of our balance sheet to a level that's consistent with implementing monetary policy efficiently and effectively in our ample reserves regime. We're closely monitoring a range of indicators to assess conditions, and that should provide signals whether reserves are approaching a level that could be judged as, quote, somewhat above ample. I don't have anything to say to you about particular dates. It's just that's the process, and what we see is that rates do appear to be abundant. As always, we stand ready to take appropriate action to support the smooth transition of monetary policy, including to adjust the details of our approach for reducing the size of the balance sheet in light of economic and financial developments. On AI, it's a big event in the stock market and in particular parts of the stock market. I mean, what really matters for us is macro developments, and that means substantial changes in financial conditions that are persistent for a period of time. So I wouldn't put that label on these events, although, of course, we're all watching it with interest.
Simon.
Simon Urbanovich with The Economist. Thank you. You mentioned in your remarks that activity in the housing sector seems to have stabilized. At the same time, since your first rate cut in September, long-term mortgage rates have gone up by a full percentage point back above 7%. I'm wondering, kind of looking forward, are you confident that activity will remain stable given how elevated mortgage rates are? How does it fit into your broader thinking about the economy?
So, as you know, as we've reduced our policy rate 100 basis points, longer rates have gone up, not because of expectations, not principally because of expectations about our policy or about inflation. It's more a term premium story. So, and it's long rates that matter for housing. So, I don't think I think these higher rates are going to they're probably hold back housing activity to some extent if they're persistent. We'll have to see how long they persist. So, we control an overnight rate. Generally, it propagates through the whole family of asset prices, including interest rates. But in this particular case, it's all happened at a time when, for reasons unrelated to our policy, longer rates have moved up.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said you want to see further progress on inflation. Given that households appear to be unhappy with the elevated level of prices, do you believe the committee should wait until inflation has fallen back to target to cut rates again?
No, I wouldn't say that. We've never said we need to be all the way at target to reduce rates. At any time, what we're doing is we're looking at the economy and asking whether our policy stance is the right one to achieve maximum employment and price stability. So I think if we would want to see further progress, but we think our as I mentioned, we think that our policy stance is restrictive, meaningfully restrictive, not highly restrictive, but meaningfully restrictive. And so I would think we need to see further progress. I wouldn't say all the way back down to 2% on a sustainable basis, although we'd love to see that, of course, and we will.
And a separate question for you on tariffs. Curious whether the threat.
Whoa, what's going on? What is going on? Y'all see that? Are we still live? Yeah, we're still live, baby. But something's going on with the video. All right. Well, guess what? Guess what we're gonna do since the video's not working, guys. We're gonna do a $1,000 giveaway. All right, we're gonna do a $1,000 giveaway. Here's what I need you guys to do. I need you. We're gonna come back to this, but I need you guys right now to not shill, spam the YouTube chat with your USDT address. All right, spam the chat with your USDT address. We're gonna do a countdown, and I'm gonna take a screenshot of whoever is highlighted. Right, go ahead and just spam your Tether address. I'm gonna go ahead and we're gonna take a screenshot. All right, so I'm gonna count down from 10. I'm gonna take a screenshot. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. All righty. And our winner is Joe. Joe, Big PP almost won, but I'm sorry, Big PP. You've been beaten by Joe. Right here, all right? Big PP almost won. Omar almost won, but it was Joe, our man right here. So shout out to you, Joe. Joe, don't you know, Mr. Joe? Here we go. Yo, yo, yo. Joe is our winner. Congratulations to Joe. Let's see if we can't get our video back rolling again while we give our $1,000 to Joe.
Financial conditions are probably still
There we
somewhat
go.
accommodative, but it's a mixed bag.
Hi, Chair Powell. I'm Richard Escobedo with CBS News. One question for you. This month's statement notes that unemployment has stabilized at a low rate and that the labor market is solid. You walked through some of what's driving this, but I wonder what risks you see that might challenge your assessment.
Well, the things we discussed earlier, one is that there's a low hiring rate. And so that if there were to be a spike in layoffs, if companies were to start to reduce headcount, you would see unemployment go up pretty quickly because the hiring rate is quite low. So that's one thing we look at. I think it's worth pointing out that for lower income households, they're under significant pressure. And in the aggregate, the numbers are good, but we know that people at the lower end of the income spectrum are struggling with costs. And really, it's high inflation for the basics of life. It's not so much the inflation now, it's the price level, because inflation has raised prices. Inflation is now much closer to target, but people are really feeling that. But overall, this is a good labor market. You're at 4.1% unemployment. That's just a really good level, and you've been solidly there now for 6-7 months. And job creation is pretty close to a level that will hold the unemployment rate there, given that there'll be much slower population growth.
One more question. Some of the uncertainty around immigration policy, in your assessment, is that making it harder for businesses and the Fed to plan going forward?
We hear anecdotal reports, but I don't see, there's nothing in the data yet on that, but you hear that kind of thing about construction, for example, and businesses that are dependent on immigrant labor are saying that it's suddenly gotten harder to get people. But I know you don't see that in the aggregate data yet, but yes, you hear it anecdotally.
Nick.
Thank you, Chair Powell. Nicholas Jasinski from Barron's.
All right, y'all. All right. Well, we've done our $1,000 giveaway. Congratulations to Joe, the man with the plan to win the $1,000. I know the press conference isn't over, guys, but I do have to head out right now. All right, I do have to head out. So God bless everybody. Thank you so much for being here. God bless you all in Jesus' name. Even if you're not religious, may the Lord bless you. Thank you guys so much for watching this volatility happen with me. I'm not really sure what's going to happen. I thought we were going to have a little bit more direction, but based on this money flow here on the 6-minute, I think we could get a little bit more movement to the upside, guys. I think we could get a little bit more movement to the upside, so I'm going to be holding these longs. And I'm going to be back with an update for you guys tomorrow. So look, thank you so much for being here. God bless you guys, and I'll see you next time. Peace.